Hey, Steve Saretsky here. As always, this is the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, I just ask that you hit thumbs up and subscribe. I appreciate the support, helps me in the YouTube rankings. Pretty big week here. We want to touch on the February numbers for the Vancouver real estate market, a little bit on the Fraser Valley. Also going to touch on the recent BC government policy interventions and some updated numbers on the Canadian economy in general. Some of you are asking, first and foremost, on that Real Vision documentary. We filmed that last week. That documentary on the Vancouver real estate market will be out probably in the next 3 or 4 weeks, so I will get you a link to that. Hopefully I'll try to post that. But again, that Real Vision, I'd highly recommend you to check out if you're interested in finance and looking at the overall big picture. Really, really good content that they have there. Yeah, I wanted to touch quickly before I jump into the stats. Somebody asked a week ago what the government was doing with a recent policy announcement, what they were going to do with the first-time home buyers grant, which of course was essentially matching first-time buyers down payments up to 5% or $37,500 for the first 5 years. I think it was interest and payment free. So yes, it was. I didn't like it because it was essentially a subprime loan being offered to buyers in a time when the housing market was extremely frothy and regulators were coming in trying to curb household debt, trying to slow down the housing market, and they brought in a policy which arguably adds on more demand, and it allows these buyers that probably shouldn't be in the market to basically leverage themselves 100%. After you factor in CMHC insurance and all that. A lot of the times, speaking with mortgage brokers, with some of these buyers that actually got approved, were able to get through all the ins and the outs of the policy, were essentially underwater as of day one. Of course, the market's been rising, so everything is great today, but you do potentially run into some dangerous scenarios down the road. So as of March 31st, they're no longer going to be taking applications for that program. I believe in the 9 months that it's been running, they've only had like 1,400 people get either approved or have used it. So I don't think it's going to have too much of an impact on the market really at all in terms of removing it. But it is, at the end of the day, it's just another thing that is removing stimulus from sort of that mortgage credit market, right? I mean, you've had the mortgage stress test, the higher rates, CIBC and I believe HSBC removing their foreign income programs where they wouldn't verify incomes. There's a lot of changes here that I think are eventually going to add up and have some impacts on the market. Obviously we can see that in the detached market. Looking at, this is something I've been talking about, a lot of the trends here for February are really a continuation of what we've seen over the last 6 months to a year, basically. Not a whole lot has changed, but you can really start to see how things are shaping up. For Vancouver real estate detached market for the month of February 2018, detached sales for February, so if you take all the months of February, dating back to the data that I have, which goes back 27 years, detached sales in Vancouver hit a 27-year low. So there was 130 total sales for the month of February. That again is a low dating back to the data that I have as of 1991. So obviously that stat is not really something you can sweep under the rug. You can say that it's just sales, but when you print that low of sales volume, that is undoubtedly going to have an impact, whether it's today or in 6 months down the road. You have fewer and fewer sales, which is allowing the inventory levels to continue to rise. And that has been putting the downwards pressure on prices. The average price, I believe, on a year-over-year basis fell 1%, but if you're looking at the median, it fell about 9%, which I have, again, Vancouver detached prices, I have firm peak values are down for the most part about 10%. And then obviously in the condo market, it's a different story. It's a continuation of where locals are playing. A lot of first-time buyers, investors or speculators that are buying secondary properties. The average and median price rose about 22% on a year-over-year basis. Yeah, I mean, the inventory levels are still near historic lows. So, I mean, that's really the reason behind everything. Sales actually dropped about 6%. I think that this is sort of an early indication of how sales are going to play out. It seems to me like they continue to trend lower. And I think that's because you've pulled a lot of demand forward. I think that all these regulations and policies are going to slow some of that demand, but you still have that demand that's in there competing for the very limited supply available, and that's why we're still seeing bidding wars and higher prices. But eventually, that I believe that could potentially all add up to something. And then if you shift the way out, again, you can see where all the local affordability is pushing further out into the Fraser Valley. Like the detached market is holding up quite well there. Sales were weak, but they're around 2012 levels, which was a bad year for real estate, but not horrible. And the condo market is still red hot. Multiple offers, average median price up 40% on a year-over-year basis. So that's basically what's happening. The same trends are continuing, but something to really keep an eye on is those falling sales volumes, because that all has an impact on the broader economy, where even from a tax revenue standpoint, fewer property transfer taxes, fewer real estate commissions, fewer lawyer fees, mortgage broker fees, etc. This all compounds on the economy. And obviously, again, looking at the Vancouver detached market, to hit a 27-year low in sales, that is substantial, which really ties us all in nicely to the latest Canadian economic data for the fourth quarter of 2017. So economic data, GDP growth disappointed to the downside, coming in at 1.7% growth. That was below the Bank of Canada's expected 2.5%. Interestingly enough, of that 1.7% growth, 1% of it came from residential construction. So, I mean, you can clearly see the historic housing boom that we're under, the massive construction. Right now in BC, there's a record high 55,000 units under construction in BC alone. So you can see really, again, just how much of that is weighing, is important to the Canadian economy. And so, I mean, I'm personally not surprised to see those numbers come in lower. I think all these regulations that are coming in to slow the Canadian real estate market is obviously going to have an impact when the huge chunk of your economy, all that growth that we've seen, it has been from real estate. It has been from borrowing more money. It has been from growth in mortgage credit that has been supporting that. And so that's the numbers that are coming in. Someone sent me an article the other day from one of these financial guys that's well followed in the United States. He actually put together a piece on Canadian real estate, and he's generally been quite bullish on real estate, but he's recently in his post turned on the more bearish side. I'm gonna actually try to link that below, but I found it quite interesting, and I tend to agree with most of his points that what's basically happening, and he sort of, I agree with this, is he felt like the BC government has probably gone too far, and they don't really realize it because they have all these new policies that have come in, such as a mortgage stress test, that really haven't played out, and they're throwing all these policies at the market without really letting them sort of settle in, because again, a housing market is very sticky. You can't just drop prices instantly overnight. You see people holding out, and that's what we're seeing in the detached market, right? Like 27-year low in sales, but sellers are still very reluctant to cut their prices, thinking that somehow prices are just going to rebound in the next 6 months or whatever the case is. I don't see that on the horizon for them. But basically, the government is having to intervene because the Bank of Canada, which would normally squash a housing boom or potentially a housing bubble, they would normally squash that with higher interest rates. they are so backed into a corner, and interest rates are so low, and there's so much debt that they know they really can't get away with too many hikes, and so they're very nervous about doing that. So now it's been basically these government's job to come in and create all these very aggressive policies to cool the market. I mean, historically, like, when have we ever had a foreign buyers tax? Now we have a speculation tax, an empty homes tax, a higher property transfer taxes, a school tax. And it's, yeah, I mean, the job has basically been left up to the governments, and this would normally be taken care of by the Bank of Canada, but as you can see, this is the precarious situation that they're in. So anyways, not going to ramble too much on about that. If you want to banter back and forth on that, I welcome that in the comments below. But just to sort of summarize on that whole GDP talk, is the Bank of Canada does have a meeting in March, and it is believed that they'll hold off on rate hikes. So I mean, obviously that's extremely important to the housing market and to the overall economy with our debt levels and all that stuff. So to me, I think the Bank of Canada is going to be taking a more cautious approach, but some of these factors are certainly out of their control. So we'll be keeping a close eye on that moving forward. Anyways, I hope that helped, and I'll see you next week.